I'm Olivia Bosnenko.
I'm Steve Guilfoyle.
And welcome
to Street Smarts. So there was a Monday tech wreck on Wall Street, Voz.
What the feck is happening with this tech wreck?
It's of some significance. A lot of the street is left wondering if tech will maintain the leadership role over the equity market that it's held over the past 10 plus years. They're a little worried about sector rotation. I don't think it goes that far, but you were about to say something.
Let's pause and rewind. Where did this stem from? From Facebook?
Well, it's the whole fiasco, you might want to. It's not really a breach because people had to agree to have.
It's not a breach. That's what I was like. Stop misusing that word.
People had to agree to surrender their information. Now, it's broader than that because only 250,000 or so people actually gave up their rights, but it extended to all their friends. So it ends up being 50 million people. So it's a big deal, and Facebook does have to police this, which invites regulation.
And that's the major thing.
That's the
killer.
That's why internet stocks were broadly lower yesterday. Some of them have bounced back a little bit today, but that's a pall over the whole internet industry, which was a tech leader for most of this time.
But not necessarily tech. We still got your homeboys, the semis.
Oh, well, yeah, well.
Although they kind of went down.
As I explained last week, the semis got in trouble with the whole Uber autonomous vehicle situation where that woman was killed, the first pedestrian ever killed by an autonomous vehicle, or allegedly so.
Now here's the argument that normal drivers or a car with a driver would hit someone anyway. I'm sorry, do you think that makes me feel better about autonomous driving? Because it doesn't. I don't know how that's a valid argument.
All right, there's been a race to market for autonomous driving. It's coming whether you like it or not, because once it's in place, it's going to be cheaper for every single business that employs a fleet of drivers. It's bad for employment, but it's good for those businesses. So we are going to get there. It requires an incredible amount of semiconductors. So that's good for the space that I profiled last week, in my opinion. But it's artificial intelligence. It relies on artificial intelligence. And as we were speaking off air, artificial intelligence will likely be the last great invention mankind ever makes.
That is such a good, he's so quotable. He is so quotable.
I heard it somewhere else first.
But now I'm just thinking, I'm just picturing insurers now having a autonomous vehicle accident coverage.
Well, they're going to have to, and it might, who knows how much the firms that make the different parts will be responsible. But I think you'll see at the end of the day that most of the accidents in the future, when we get to that place where some of the drivers are humans and some of the drivers are robots, you're going to find out that the more dangerous drivers are the humans. And then there will be regulations against driving. They'll surrender the right of way or the busiest times to the robot drivers because it'll be safer and they'll obey all the traffic rules. So this probably leads down a road where humans actually give up some of their rights.
I'm just seeing the thinking cloud over you, Stephen, which, by the way, moves on to the cloud.
Yeah, well, as you know, I like the cloud. I like the semis and I like the cloud. But Oracle had lousy earnings last night. Well, they had nice EPS numbers, but their numbers for cloud growth were actually below the street's, what the street was looking for. Mm-hmm. And as you know, I came in long some Oracle, and I had sold some puts and sold some calls. And I'll probably end up having to pay 50.5 for some of these shares, or I'll buy back the puts. Otherwise, I'll be increasing my long position in Oracle, which doesn't sound that attractive right now. The only positive is that I did sell some of this and put it into Microsoft before the fact, just as a reverse hedge. And that's actually working out a little bit because Microsoft is a little higher. So I am going to lose money on this trade, but less than I could have lost.
Well, you're talking about puts, and what comes to my mind is a Fed put, which we no longer might see. FOMC makes a rate decision tomorrow, which is most likely going to happen.
This is a big deal for the general economy and for the market as well. And the Fed is probably actually, although we have many reasons for the volatility, government, tech, you name it, the Fed is one of the drivers probably of volatility at this point. We all expect this rate hike tomorrow. I'm sure it'll be the first of at least 3 or 4. I mean, depending on how you read the futures markets, right now it's about a 30-something% chance of a 4th rate hike in December. But the real story is going to be forward guidance. It's going to be the dot plot, how the members of the FOMC, when they see that 4th rate hike, do they push it into January, do they leave it in December? Also, you got the balance sheet management, which becomes a bigger deal in April than it was in March. The quantitative tightening program, which began last October, will now jam itself up to about $30 billion a month, rolling off in terms of treasuries and mortgage-backed securities. We've already drained about $63 billion off of the balance sheet since October. Now it gets a little more aggressive. In 3 months more, it'll get even more aggressive. This is a stealth, they want it to be a stealth way of draining liquidity out of the economy. Now, hopefully they can keep doing so. I think they already are causing a little bit of volatility. That remains to be seen.
I always say we're no longer being spoon-fed.
No,
Get it fed.
We're not. And Jay Powell, obviously, it's his first press conference as Fed chair. And how he presents himself, how he presents his views on the Phillips curve, this will all matter as far as inflation.
He's learning a little bit about rhetoric too, right?
Yeah, I think he is. To say the truth, although I have mocked, I guess, many members of the Federal Reserve Bank in the past, I really haven't ever gone after Jerome Powell, and he's not an economist. So I like the fact that he's been in business, that he has some real world experience. He hasn't lived in the ivory tower and never ventured across the moat. He's been across the moat. He sees how the rest of the country lives at some point in their lives. And I have a feeling that he'll be a more pragmatic guy, which means also that he'll be more aggressive if he sees trouble coming. So it's not necessarily the easy street we once had.
Well, when we're talking about the markets, when it comes to you talking about the markets, you are an economist and a trader, which is why it's time for
Market Rush. All right, we have a lot of people asking about Kratos Defense and Security, which is a name I've been long for eons. All right, I got in at much lower prices, but I sold some when it was trading higher. I've been in and out. I've traded the name, but I've never really been completely short. I've almost always had a long position. And a man named Ben Axler, who works, I got to look at my notes, for Spruce Point Capital, he's a noted short seller, and he's a pretty good one. All right, he came out against the stock last week. He said he saw, for reasons that made some sense, that he saw 40 to 70% decline in the share price.
Well, with a last name like Axe,
and he rattled the market.
you might as well axe that.
He made this claim with the stock trading around 10 and a quarter, and it traded down below $9 on the day that he made these claims on CNBC and on extremely high volume. So he did put a dent in the stock. But I'm going to come out and defend the stock a little bit. In fact, I just bought some a few minutes before we went on the air.
I watched him. I watched him like this.
I usually don't violate my net basis, but I tried to buy a little last night in the late going, and my bid was never hit, so I had to chase a little bit today.
All right, let's take a look at this bad boy.
Okay. Now, this is the deal. My numbers are for Q3 17, which from Q3 16, profit margin in the stock grew from 17% to 25%. Cash on hand and cash equivalents grew from 21 million to 281 million. Debt levels dropped from 445 million to 369 million. Your current ratio is 2.49. Your quick ratio is 2.43. What does that mean?
Current ratio, yes. I asked Stephen, what's a current ratio?
Well, that means that if forced to, this firm could meet all their short to medium term obligations. It means that, yes, they do have a heavy debt load, but they have enough on hand in terms of, well, the current ratio includes the inventories, quick ratio doesn't, but they have enough resources on hand to meet their obligations and not go out of business.
And what's a bad number for current ratio, just for the future?
I would say below 1, below a solid
look
1.
at this, is gorgeous, beautiful.
Well, you
what's
do
this guy Ben have? What's his deal?
I prefer a number between 1 and 2 because it means they're managing their debt efficiently. This could imply a less efficient management of debt, but they're not in trouble.
Oh, geez.
Okay, so we
don't want to pull a G.
They can meet
here.
their obligations. In recent months, they have sold $270 million worth of contracts, or they've been granted $270 million worth of government contracts. What they do basically is they make drones for the Army and the Navy and the Air Force. They're a government contractor. This is important. They have received permission from the State Department to sell their Mako drones, which are a high-level drone, to European markets and Middle Eastern markets. So now they can sell beyond the U.S. military. They're expanding their client base.
Ooh.
So of course they're held to our allies. But,
yeah.
But this means they can sell to more people. They lost money in 2017. For 2018, they're looking to make 18 cents on 646 million. A forward-looking PE ratio where it trades right now, which is around $9.60, of 28. All right, it's a little high. The valuation's a little high, which was probably Axler's case. But they're coming off of a year where they lost money. So often PEs are a little skewed when that happens. you want to see growth. For 2019, they're looking to make 34 cents on 714 million. So if the analysts are right on this name, there will be that growth in place. And I think the name is cheap enough where you might want to take a speculative, or even not just a speculative shot, because these guys are making more money and they are controlling their debt levels. So it's a little speculative, but it's cheap enough where you can make that investment, and I think you do have prospects for some. I'm not going to tell you you're not going to sell this thing for 100, but you might sell it at 12.
Nice.
And 960 is important. It's a pivot point for the stock. 960 is about where it was trading when we went on the air. It's a Fibonacci level. If it goes back below 960, it's going to end up being resistance.
That's what yeah, couldn't it be resistance?
So,
all right. Well, Stephen is bullish.
I'm mildly bullish and willing to bet some money on Kratos.
Okay, a little
Kratos.
bull. On Kratos. All right, a little bull. Cool. All right, next.
Next, what do you want to talk about? G20?
The G6. Yes, I want to talk about the G20, which which I know you throw some shade on the G20.
Well, I never get excited about the G20
I
meetings.
thought you would. I'm mildly shocked.
They end up being, as they have been this week, they whine about a lot, all right? They're worried about the U.S. move against free trade. And I know some of you probably out there, you may feel the same way. You know what? Somebody punches me in the mouth 25 or 30 times and I get up, you better stand by, because I'm coming for you. And this country is coming for these people that have been taking advantage of us. Yeah, I'm a trader. I might lose some money, but I'm an American first, all right? And I always will be. And I got a flag right here that says it. I will back this country's policy to the hilt if they want to even trade ratios on tariffs that are 25-2 in some instances, and I think 10-2 in Europe. Europe's making some noise right now. They want exemptions. Okay, maybe Donald Trump will give them exemptions, but he'll get something for it. He won't get pushed around like the last two guys.
He's the master of negotiation.
I don't know if he's the master of negotiations, but he's going to negotiate.
Yeah.
He's not just going to say, okay, thank you.
Or the master of jobs, whatever his moniker is. But you know what? I know you say that the G20 could be useless in that terms, but for me, someone said something about Bitcoin. Who is it? Kuroda?
Well, I think a few of them, but Hirohiko Kuroda, the governor of the Bank of Japan,
yes,
he was speaking in a way that, and he's very influential, that maybe the world doesn't want to be too aggressive on regulation regarding cryptocurrencies, that maybe they want to let new technologies expand before they crack down on them, which actually, you've seen what's happened to Bitcoin of late. I mean, it's dropped from...
Of course I did.
In the last month or so, it's gone from between $10,000 and $11,000, I think, to below $8,000 the other day.
Now it's back up, and that's what I'm saying. So it's not what is necessarily discussed there. You could say it's a bunch of hoo-ha, but for me, Bitcoin...
Yeah, he probably put about $900 back onto the price of Bitcoin by his comments. Thank
you so much. So I have to say thank you, G20. Thank you for what you did for my Coinbase.
Thank you, Hirohiko. and basically, he just wants to avoid regulation a little while longer. But I do think that there is a reckoning coming for cryptos at some point when they become too powerful, when they become too important, that the central banks will want to reassert their dominance and retain their power.
Okay, but in the meantime, I think the name of
it's not going to zero. There's a place here, especially in countries that have currencies that are extremely weak or in danger of being worthless, such as Venezuela. If you were a Venezuelan, would you rather have the Venezuelan currency or Bitcoin? I think you'd rather have the Bitcoin, even though...
I would rather have a lot of other things than that.
There's places in the world where something like this is necessary, but when it does come to maturity, it'll probably be regulated by the central banks or even controlled by them.
So, Stephen, I think we have the name of the show, right? We went in with regulating internet or regulating tech.
Right.
And it's potentially kind of, for the meantime.
Someday. Right.
Deregulating. Well, yeah, okay. In the meantime, deregulating Bitcoin. Very interesting.
Well, not deregulating. They're just
just not regulating.
They won't be so aggressive.
It's not regulated yet. You can't deregulate something. It's not regulated yet. All right, cool.
That's it.
That's the name of the game, guys. What do you think?
Till next Tuesday.
Till next Tuesday. Thanks for tuning in.